Hi, believers. This is Amit from the Wire team, and I'm here to provide our weekly bite and the road ahead in the markets. Equity benchmarks extended their decline for a third straight week, mirroring subdued global cues. The Nifty closed the week at slipping 0.3%, and Bank Nifty fell by 0.5% as a weakening rupee dampened market sentiment. The broader market, represented by mid-cap and small-cap index, fared relatively better, both ending largely flat. On the sectoral front, IT, FMCG, and PSU banks stayed in focus, while financials paused after recent gains. Technically, Friday's sharp rebound has brought the index closer to the upper band of the downward slanting channel. The sustained breakout from the falling channel at 26,000 would confirm resumption of uptrend, paving the way to challenge the all-time high around 26,300 and eventually open the door for the next leg of the up move towards 26,700 in the coming month. The important support level is 25,700, which the market is respecting since last month, and it should likely be the most important support levels to follow. Structurally, the index has been undergoing a slower pace of retracement. With the past 3 weeks correction, it has retraced merely 61.8% of the preceding 3 weeks rally. Amid this corrective phase, index has respected the 50 days moving averages, which has been held over the past 2 months, underscoring the market's inherent strength. The Bank Nifty has been trading around its 20-day moving day despite ongoing global volatility. Meanwhile, gains in IT and oil and gas signifies revival in upward momentum. Together, these three sectors account for 55% of Nifty's weightage. Historical data since 1995 suggests that on 90% of the occasions, Nifty has delivered positive returns in the last 10 days of the year, with a median of 2%. We need to see if Santa rally occurs this time or not. Let's see. The key monitorables for the upcoming week. First is India-US trade deal. The favorable outcome of the US and India trade deal could accelerate the positive momentum in the market and pave the way for return of the FIIs in the Indian markets. Second is Brent crude oil, which dropped 2% during the week and surpassed its previous swing low. Further cool off in Brent crude oil bodes well for the domestic market. Looking ahead to 2026, market valuations remain elevated even as earnings growth has been underwhelming but improving for sure, which gives hope of full earnings recovery by Q2 of next financial year. Recent tax reforms could support consumption-driven sectors, particularly automobiles, allowing them to sustain momentum. Low inflation, steady credit growth, and the prospect of falling interest rates should continue to provide a tailwind for the banking sector. Another important thing is 2025 was a year that rewarded bottom-up stock selection, and that environment is likely to persist for next year. Agility, disciplined bottom-up research, rigorous risk management, and timely capital rotation will define successful investing in 2026. And at Vaya, we are aiming to do same for our subscribers to keep them ahead in investing journey. That's all for today. Wishing you a profitable trading week ahead.